Hello everyone, welcome to our YouTube channel. And today I would be talking about open interest and change in open interest. So I have made multiple videos on this particular topic, and but today I would want to talk a little more about option chain and also open interest OI in detail. Little more information on it, which I may not have spoken in my previous videos. So, what exactly is open interest? So many people fail to understand that open interest is a kind of an indicator. Open interest, as the name suggests, would actually mean that people has shown interest on this particular strike price. So this is an options data, and if you are new to options, if you do not know what a call or put is, then you can go to the basics of options and then come back on open interest. Right. So open interest completely works on strike prices, where the and especially good for very good for option sellers. Now, many people say that change in open interest and things like that, but let's understand what is an open interest. So, open interest actually means if you go to the strike price and if there is an open interest, and there is, you will see volume also. Please do remember that if there is a trade, there is a buyer and a seller, that would be usually considered as one open interest. As you can see here, 69,975, that is the actual trades which has happened. Now people might ask that what does this mean? So please do remember that if a buyer needs to buy something at a certain price, there has to be a seller too. There are no sellers, the buying cannot take place. It just cannot happen. So that's when open interest comes in. So as soon as a trade happens, it will be one open interest, and then it keeps on increasing. So when the open interest is actually increasing, it is, that means there are more sellers there in that open interest, because as per the basics, the open interest is the very first person who initiates an open interest is a seller. Of course, there has to be a buyer too, but a seller initiates it. So if there is no seller, if there are no sellers, there there are no open interest. So if you can see these blank, that means there are no open interest, there are no sellers, or there may not be any buyers also. That is also possible. But if the seller is not there, that means a trade cannot even execute, cannot happen. That's how it works. So most of the times, whenever a change in open interest happens, if it is increasing or decreasing, that will show a small trend line. It's not the trend, but it will show an indicator. It's an indicator. That means if there is an increase in open interest, that actually means that there are more sellers who are willing to sell at that price. Meaning um, meaning uh, if it is a call which people are selling, that means people are bearish on it. That means people are willing to sell and take the sell positions on it. That means, so if open interest is increasing on call side, that actually means that people are not so bullish on it. The people are not scared that it will go up, because if it goes up, people will lose money. The traders, the sellers will lose money if it keeps on going up. So if more sellers are available, the open interest is increasing on the call side. That actually means that either that would be known as a huge resistance. People know, the traders know that from a certain level it will not move ahead. So it can be bearish also, or it can also be a range bound session. But usually when people are increasing the open interest on a call side or one side, for example on the call side, that means more people are bearish on the nifty or the underlying stock or nifty, whichever they are. So That's exactly what open interest is. So this once you understand this concept of open interest, and then try to monitor, go to this particular website nseindia.com and option chain. Try to see where most of the times, as a beginner, I would suggest you to concentrate on Nifty, because that's the index, that's the benchmark from which people trade. So that's a market sentiment too. People are more um, inclined towards Nifty, towards the benchmark, and much more sentimental about that too. So as soon as the Nifty starts crashing, people will start selling their stocks too. So FIIs, DIIs, and even the retail investors do the same. So this is about little bit more about open interest, which I have not spoken about in my previous videos. And whenever you see any kind of videos from my side, please try to observe in the next few days as to how it is behaving, and then if you come up with more questions, I'll be happy to answer them, and then clarify your doubts for you. All right, so hope you enjoyed this informative video, and if you want to read some good books about investment, or fundamental analysis or technical analysis, feel free. There are some very good books recommended on the description box below. These are some of the very good books and legends of stock markets. Whether they traded in Nifty or not is not the concern, because the concept is the same. Whether you trade in US, whether you trade in Europe, or whether you trade in India, the concept about the benchmark and the open interest, technical analysis, this remains same. That's exactly the concept is derived from. Even the full form of call and put, it's CE and PE, which stands for call European and put European. That's basically from that methodology the prices are based. Again, that's a completely different topic, but hope you got the point. About if you have to learn from the basics, learn from the best. That would be the best way to go. So there are a lot of books, some books which are recommended at this point of time, and you can see in the description. You can easily order from the Amazon. There are also a lot of free books available, which I will research and give you the links very soon. So hope you enjoyed this video, and I will see you again on my next video.